In Cardano, seeds often get planted in both our minds and ecosystem that, whilst initially they provide much excitement at the thought of them blossoming into real-world impactful utility, as time goes by, this excitement can turn to frustration when we don't see them grow into something substantial within our own perceived time horizons. But nurturing an entire blockchain ecosystem that's capable of attracting and servicing the needs of a user base at a scale yet to be seen in this industry takes time, effort and patience. The truth is, many seeds have already been planted, and whilst they're at all different stages of growth or development, one thing's for sure, their roots run deep in the fertile foundational soil laid by IOG. From the projects building yet to deploy, the ones already here in their first versions, to the community developers building out the tooling, infrastructure and solutions that are paving the way for waves of new builders to enter our ecosystem, the activity taking place beneath the surface is significant. In just under a week's time, when Vasil arrives with its next generation watering system, the Cardano blockchain will take a huge step towards flourishing into a forest of utility. From seeds, deep roots, stems to trees, our DApps ecosystem will be like no other, and we in the Cardano community all get to enjoy the fruits of this labour. Welcome back for today's instalment of Cardano Insights, where we track the all-important developments at the very pulse of Cardano and its ecosystem each weekday. So let's get straight into it. Now, with planting seeds in mind, if you remember a few days ago we discussed Origin Thread's Catalyst proposal that intends on building a solution that delivers transparency and accountability to the clothing supply chain. Demonstrating specific use cases for blockchain technology with real-world impact will no doubt help drive the adoption of Cardano. Well, yesterday we got this announcement from the Cardano Foundation in collaboration with Georgia's National Wine Agency, the Bolnisi Winemakers Association and ScanTrust will create a solution on the Cardano blockchain to ensure the quality and authenticity of Georgian wine. The collaboration will develop a creative, cost-effective and flexible certification and traceability system which will provide transparency and authenticity for wineries and customers from point of harvest to point of consumption. A pilot program will be expanded in the Bolnisi region, serving both local and export markets. It will initially include up to 100,000 bottles of wine. The bottles will carry a special label with a unique and secure QR code that allows customers to check the authenticity of products and learn about their history. Additionally, the National Wine Agency will use the Cardano blockchain to create public verifiable records from existing wine certification data on wine targeted for export markets. Bolnisi's Winemakers Association's goal is to produce and export 12 million bottles of wine in Bolnisi across the next decade. Currently they produce a total of 200,000 bottles of wine annually sold to Georgian, European, US, Australian and Chinese markets. In order to grow beyond this, they've identified the need to enhance trust in their products and state that this track and trace solution on Cardano is fundamental in achieving this goal. The ability to crack down on counterfeiting, authenticate the quality of ingredients or materials and origins of a product in a global supply chain is a major concern for businesses. So whilst the use of this technology positively impacts the consumer who can verify the goods they purchase, the transparency it provides significantly improves the supply chain at the manufacturer, distributor and bulk vendor level. It's here where we can potentially see the most impact from many more enterprises to follow once they see a blockchain solution being implemented in real time. Now, the Foundation often receive a lot of pressure from the community, which I also support, about making real-world partnerships to drive the adoption of the Cardano blockchain, but it's often thought, wrongly in my opinion, that they're doing little to achieve this. I've also seen many in the community pretty underwhelmed by this announcement, and I agree that on the surface, it isn't a project that will demonstrate or deliver any immediate short-term value. However, in terms of blockchain, and Cardano specifically, demonstrating real-world application of the technology in real-world businesses like we see in this partnership, no doubt will form a starting point to prove its use case and onboard many other enterprises in the future. Next up, to a partnership I wasn't actually aware of between two highly anticipated Cardano DApps we've covered recently on this channel. In this blog post published by MELD yesterday, they dive a little deeper into what we can expect from their partnership with Maladex. I think it's well worth a read, so I've linked it in the description below, but we'll go through some of the specifics here. It starts out by discussing the emergence and growth of decentralized finance, then details some of the risks associated that we're all too well aware of, like smart contract vulnerability, impending regulation and impermanent loss. It then provides a great overview of what Maladex specifically are bringing to the Cardano ecosystem. For example, their programmable swaps, investing and trading strategy products, investment opportunities through derivatives and crypto indexes, portfolio management, risk mitigation tools, and in addition will serve as an education platform. In essence, Maladex will be a comprehensive trading platform that will provide everyone the tools previously only made available to professional traders, with innovative tech made possible by Cardano's EUTXO model and off-chain computation. Maladex is striving to leverage every inch of capital efficiency to mitigate risk and maximize the benefit for its users. One way it will tackle this is to minimize impermanent loss associated with DeFi liquidity to the point of it being negligible. The article also breaks this down nicely and provides how they're addressing this with links to the Maladex white paper. MELD and Maladex share deep core values in that both teams want to bring economic freedom that is cheap, flexible and accessible to everyone. MELD aims to become a decentralized non-custodial banking protocol where you'll be able to securely lend and borrow both crypto and fiat currencies. Built specifically on Cardano, MELD will offer a series of refined financial instruments, allowing DeFi to be used in a way like never before. For example, by offering lending products such as negative interest loans, where borrowers pay back less than the original loan amount, and their highly anticipated Genius loan, where the yielded earnings from the deposited collateral cover the principal amount. In essence, a self-repaying loan. MELD will also enable loans to be taken out as fiat currency, something that has never been done before, which is all made possible by the technological advancement and capital efficiencies of the Cardano blockchain. So in terms of the partnership, to begin with, MELD and Maladex will ensure that each protocol's token is integrated into each platform. MELD will add liquidity on Maladex's platform to ensure both smooth and efficient trading of assets, and Maladex's MAL token will be provided to MELD's credit market so that people can borrow MAL tokens against their crypto. Further to this, an ongoing element of support and research-driven collaboration will ensure that the services offered by both platforms will be tailored for its users. The Maladex team will also be offering ongoing expertise and support to the Akamon bridge, helping to ensure security to the highest possible standards. Personally, I find the MELD Maladex partnership an extremely intriguing one. In combining the financial services of Maladex's decentralized trading platform and the decentralized cheap and accessible crypto-to-crypto and crypto-to-fiat loans offered by MELD, this has all the ingredients to form a formidable and interoperable financial force, one that both traditional institutions and other blockchain ecosystems will not be able to ignore. As always, we'll be following the progress of this partnership and the developments of the two projects themselves very closely on Cardano Insights. So from two projects yet to launch to another that only just recently arrived, early this week we got the introduction of AADA Finance. So what's happened since the launch and what's next in store for this project? So first, if we head on over to the AADA Finance app, you'll see the available loans that are ready to be funded on the market. Right now you can either choose to fund the loan or create one yourself. This is the basic version 1 iteration of the protocol, a pure peer-to-peer experience. Whilst upon arrival the market may seem small, this being peer-to-peer, similar to MusiSwap's order book deck swaps, loans at AADA are created and funded by the users of the platform, not served from liquidity pools. Therefore, if you want to loan, you'll have to monitor the market on a regular basis to find the loan that suits your lending requirements. So in its current form, you can either make a loan request to borrow, or alternatively choose to fund an existing loan on the market and become a lender. But don't be fooled by the seemingly small market of available loans. A quick check at DeFi Llama, here you can see AADA's TVL, whilst low in terms of established lending protocols in other ecosystems, has steadily increased since its launch on Tuesday, now standing at 264,000, making ground on Lending Pond, another DeFi lending protocol in our ecosystem. As loans are funded, they disappear from the marketplace and the collateral value is then locked in the smart contract secured by the NFT bond receipt. It's going to be very interesting to see how quickly the TVL rises here. So the AADA seed has been planted, the roots in terms of the tech behind the protocol runs deep, and it's now that given time, it will evolve into an extremely important part of our ecosystem. So what's next for AADA? The team have made it perfectly clear that the work really starts now, confirming they will continue to improve their current DApp with the addition of a homepage for statistical information, continue to add more borrowable assets through the governance voting process, and something that I think is really going to enhance the user experience, the introduction of lender requests. When enabled, which going by their Telegram will happen very soon, users will be able to make a lend request in addition to a borrow request, further increasing its utility and activity. It's important to remember this is just the beginning of the journey for AADA Finance. In version 2 of the protocol, they will introduce liquidity pools offering self-serving loans, just like we see on Aave for instance. Only with AADA, the innovative NFT bond concept provides that added utility and potentially explosive secondary marketplace of the bonds being traded, something we will soon see evolve. Lots to look forward to here, and I'll continue to bring you all the developments as they arise. Now, with lending projects in mind, let's check in on Lending Pond, a collateralized NFT platform we've previously covered on this channel. Whilst already launched, this is another example of projects constantly evolving. With Vasil just around the corner, they recently confirmed the launch of their version 2 of the protocol will soon be announced. So what do they have in store in terms of the version 2? Here they outline a list of features but state not limited to, confirming the version 2 of the protocol will include new UI, NFT renting, NFT and token shorting, NFT and token marketplace, NFT trading, NFT and token options, lending on tokens, on-chain counteroffers, and bundle loans and sales. Interestingly, the version 2 will allow you to apply for a loan using your NFT, but will still have the ability to accept or deny trade offers against the collateralized NFT. Subsequently, this will offer even more flexibility to the borrower in terms of repaying the loan. In addition, the introduction of lending on tokens increases the competition for other platforms like AADA Finance, which is extremely healthy for the ecosystem. Now, it's not only DApps launching and improving their platforms, we cover many of the Cardano wallets on this channel when they have new releases, and recently we got this from Eternl. They announced the release of version 1.9.2 and it's packed with features. One of the most impactful being the introduction of a fiat on-ramp via the integration of Guardian.com. Whilst KYC is mandatory, users are now able to buy ADA directly through Eternl Wallet via credit card or SEPA transfer. The Eternl update also includes new features to their transaction builder, such as token fragmentation, automating the cleanup of accounts with many tokens, and collect UTXOs, where in one click, wallets with a large amount of UTXOs can be combined all in one go. They also added price charts for tokens available on dexes thanks to tap tools, and a whole lot more. If you want to go check it out, I've linked the thread in the description below. Now, I could have kept going all day with examples of projects across the entire ecosystem that are at all different stages of development, continuing to evolve and build out their DApps. A lot goes unnoticed. As an average user, sometimes we fail to consider the sheer amount of work that's actually taking place here. But it is all steadily coming together, and I think the build out is going to creep up on many people. Vasil is certainly going to be an accelerator for the growth that we all want to see. I guess what I've tried to get across in today's video is that we have a solid foundation of fertile soil, many seeds already planted, roots that run deep with many stems now starting to show. Now let the technology permit the growth of long-standing trees and enjoy the process of watching this all come together. So that's it for today's installment of Cardano Insights, as we keep track of all the developments and continue to spread those positive Cardano vibes. If you found value in the content, then please be sure to comment, share, like and subscribe to the channel. I know I say this often, but it's true. I really do appreciate all the support you guys continue to show me. For that, I'm really grateful. We'll be back Monday with your daily roundup. Until then, thanks for watching, have a great weekend, and as always, keep it Cardano.